I bought $500, about $500 worth of Bitcoin, and just kind of sat on it for about a year. And then,
So Forex, what are you seeing on the charts right now? Like, are we in a early phase of a bull run, or are we still like in a fake out stage when we're sitting at around 23,500 to 25,000 USD? Yeah, what's happening?
however, I do have an opinion on a macro move right now.
Hi, everybody. Today we have a very interesting conversation lined up for you. We're speaking with Forex, who's one of the biggest traders on Bybit for a very long time now and has been doing huge volumes. We're going to find out his history, how he got started, and how you can improve your trading game. I'm not too much of a trader as well. I've been, as you know, a long-term investor, but like it's always good to understand how to kind of simply visualize the chart and kind of learn from people who've been doing really well in the space for a while. But before we get started, like, got to tell you that Forex is in an animated form today. He's anonymous, so maybe we can start off with that. Hi Forex, welcome to the show.
Yeah, so I have this pseudonym that I've been going by for a long time in the space. I've been working in the crypto space as a developer and an investor since 2012. The fact that I came into crypto um in the early days when many of the developers and many of the people involved were anonymous, or at least pseudo anonymous. And I want to do things that really challenge the current narrative and the current banking system. I enjoy the privacy when I want privacy, and I enjoy being a public figure.
But what were you doing before you got into crypto in 2012? Were you a trader before that?
I started getting involved in trading very early when I was my senior year of high school. So from very early on, uh, my whole goal was trying to figure out how I could take that starting capital, and I started off very early with stock and stock options. I got involved in some investment properties. I started focusing on the Forex market, and very shortly after that, I got introduced to Bitcoin. From that point on, I really kind of put stocks and the options market aside and really heavily focused on the Forex and Bitcoin market at the time.
Got it. But what exchanges were you trading back in 2012, 13? Like,
In 2012, I was trading Forex. I had bought Bitcoin for the first time. I bought $500, about $500 worth of Bitcoin, and just kind of sat on it for about a year. And then in 2013, I believe, I was watching the news, probably CNBC or something like that, and I heard about the WikiLeaks fiasco, or whatever you want to call it, where they got their payment processors shut down, and they lost any way to donate to them. So they gave a Bitcoin option, and essentially overnight got millions of dollars worth of Bitcoin donated to them. And this is around the same time as Silk Road came out as well, and it just became very apparent to me at that time that this is a viable option for moving capital around in a way that could not be censored, and is very hardened against influence.
so Forex, what are you seeing on the charts right now? Like, are we in a early phase of a bull run, or are we still like in a fake out stage when we're sitting at around 23,500 to 25,000
Yeah,
USD? Yeah, what's happening?
I do think right now that we are hitting a macro top, and we'll see a correction. And this chart I have here, if you can see, this is a volume profile chart that I have set up over this past range since July of last year. And as you can see, we're hitting the top of a supply zone, and the price a bit of a correction here. And now we're seeing a little relief pump as the price is testing this quarterly pivot point, just under 24,000. I don't think that this relief is going to break a new swing high. I think it's mostly just a relief over the weekend after a sharp move down. And I'm looking for a move down to around 21,000. And I have multiple indicators that I'm looking at to derive this potential projection down to 21,000. So when I say a move down to 21,000, that is not saying that we're going to go right to 21,000 and definitely find support there. But there are several indicators that are telling me that we're likely to go there. One of them is just the value zone that we've accumulated here between 16,000 and 17,000. We broke above it, very sharply. We've made this swing high, came down, made a new swing high, putting in a bearish divergence, breaking down below this quarterly pivot. And when I say quarterly pivot, it's essentially a derivative of the price at which the most volume was traded over last quarter of 2022. This is likely going to be the point of resistance on this little relief pump, and I'm looking to come down and test at least this untested monthly pivot. This is in confluence with the top of the value range here. You see it comes in right here. And then also, I have some other things that I'm looking at, one of which is this liquidation heat map. I believe you guys can see this. This is a chart that I have aggregated, taking data from Bybit, BitMEX, and Binance. And what I'm doing is taking in several values such as volume, open interest, funding rates, long versus short ratio, and I'm able to then project where consolidations of liquidation points are. So this is this little bar on the left is representing contracts, and at the top you have 20 billion contracts, and it goes down to 5 billion at the lower range. And as you can see here, right at 21,000, just slightly below it, I believe it's 20,800, we see a huge untested consolidation of over 20 billion contracts that will be liquidated if the price was to come back down here and test it.
Okay, so Forex, what's happening with the markets right now? Can you tell us, like, short term would be like 3 to 6 months sort of a time horizon, or would it be smaller? Like, can you give us a brief on what's happening and what you're seeing on the charts?
My typical trading strategy is really looking at intra-week moves. And when I focus on trading, I'm looking more at intra-week and sometimes multi-week trades. But I do have a macro opinion right now. When you look at this chart that I have here, you can see that we put in a bottom at this demand zone around 15,000. We made a push up to 24,000, a very sharp move up. We had a slight correction and then another move up to just above 25,000 to this previous supply zone. At the same time, we put in a bearish RSI divergence, and we got the spike down just below this quarterly pivot, this little purple line here. And this quarterly pivot is essentially a divergence based on the price that the most trading action took place last quarter, so the last quarter of 2022. Now, we saw this move down here in conjunction with a very hot PPI. That hot PPI release caused a further move down based on the market predicting a more aggressive Fed, right? So interest rates are the major movers right now in the market. It's the strongest fundamental indicator on where the price is going to go. I'm relatively confident that we have cemented the major low, and we are in the beginning stages of a bull market. So why am I looking at the 21,000 level? For one, that's the top of this value range over the past 5 or 6 months. We also have this monthly pivot, which represents the price at which most trading volume took place last month. And you see here that between 22,500 and 20,800, we have all of these untested liquidation levels that are highly probable to be taken out before we can see another rally. So when I say that I'm looking for a price correction down to 21,000, 20,800, I'm not saying that the price will go down there and make an immediate rally. What I'm saying is the price needs to go there to have the most efficient market possible under current conditions. And this, along with some basic TA and some of my other proprietary tools that I kind of keep close to my chest, are keeping me in a short position right now that I entered in at 25,000 and that I plan to hold at least until 21,000, but likely a bit lower than that. However, I do not expect the price to break down below 17,000.
Yeah, so you're assuming that, do you see in the next 6 months to a year on a macro perspective, the regulatory side moving, etc.? Do we see anything below 15,000 at all?
It's possible, of course. It's always possible. When I build my analysis, I am not looking at a super macro perspective. So when I am managing my HODL position, I'm really just taking in these key patterns that have happened year after year, cycle after cycle in Bitcoin. So for me, when I'm looking to make my long-term trades in Bitcoin, not my week-to-week swings, which is like my bread and butter, but my long-term HODL positions, and I'm looking to be taking profit once we hit 3 times the previous all-time high. So this is a standard that has worked really well for me. So one thing with trading is you have to know where your edge is, and you need to know what your strategy allows you to reliably get an edge in. We've seen it. The previous all-time high was a tighter range than the previous all-time high, and again, tighter from the previous. And this is just the nature of economic momentum. I do think that in the long term, that standard of 3 times the previous all-time high will play out, and I am still confident in that. This last cycle, I do believe, was cut early due to COVID and due to the pandemic, if you want me to say that, and all of the outlying circumstances that happened in this previous cycle that we did not have to engage with all of the previous cycles.
During the core pandemic time, the market did fairly well. And then when the market started opening up, sort of like the world started opening up, we started correcting again. So what do you mean, like the pandemic sort of like made it cut short? Like the richest man in the world bought Bitcoin, and that's when we sort of moved from around the range of 60,000 to 69,000 to a certain degree as well.
Yeah, so I see multiple factors that came into play. For one, we had the listing, which creates a derivative market. We also had the inflation environment shift, which also had a massive negative impact on the market. And you're right, the COVID circumstances and all of that did come in at a... but I think it's one of the factors that came into play that did not allow for the second leg up that a lot of people were expecting.
Yeah, absolutely. And I also think another reason for the rally during the pandemic. So I think two main reasons. One being a lot of institutional investors came in, like we have spoken about a lot of times. But more than that, what I feel is since people were not having any work to do, they were sitting at home. There were also quite big number of layoffs. So a lot of these retail investors, especially the younger ones, started getting into trading, and they wanted to spend time at home and try to make some sort of passive income with the stimulus checks coming in. So we saw on Coinbase itself that a lot of deposits of $1,200 were hitting on Coinbase, because all of that money was the new money was being poured into the market, and that again led to the price going up more and more, because people started believing that they could sit at home, trade 24/7 and make a lot of money. So that also caused the rallies, what I also believe. That being said, it's good to see these insights, forex. Personally, I also believe that in the short term duration we could see a correction, although I do believe that the correction could go a little deeper towards somewhere around 15 to $16,000, and potentially a final leg down towards the 12.8 to $13,000 region.
Forex, tell me about like tricks and tips of trading, which like new traders could kind of use. Have you ever been liquidated? Like, tell us some of the good and bad experiences you've had. Some of the calls that you were certain about kind of backfired and stuff.
I started getting into actually trading Bitcoin relatively early. I was a holder and investor in Bitcoin as early as 2012. I got involved with local Bitcoins, and I was using local Bitcoins very early on. That was my main method of getting in and out of Bitcoin. And of course, it's not an extremely liquid way to do it, but it really suited my needs, and it was a great service for me. And I used that service until around 2017. Yes, I got liquidated a lot. One of the reasons I got liquidated so often is because I had a strategy that was working very well for me in the Forex market. And as you guys know, I'm not only a trader, but I develop DeFi products, and I started developing and coding specifically to build my own tools and to build my own strategies and indicators. And I had built a strategy and a system that was working very well in the Forex market. To be honest, I lost a lot of money in the early days of trading Bitcoin, largely because I was trying to use the same strategy that I was using in the Forex market. Having that experience is one of the major drivers that allowed me to develop the system that I use today in order to get an edge in the market, which is largely looking at where retail is going to experience the most pain, and where the largest transfer of capital will happen from liquidated retail to large market makers. And once you can create a system that allows you to reliably essentially predict where the most transfer of wealth between retail to major market makers will happen, from that point it's a great foundation to start to build a trading system off of. So what I would suggest to new traders would be, don't start off with live capital, and get some time in the market before you put any capital on the line. And then of course you never want to put any more capital than you're willing to lose in any trade. Choose position size based on the distance between your stop and your entry into the market, and the amount of capital that's at exposure to this trade should be a percentage that is calculated before you ever enter the trade. And the reason you're able to calculate this before you ever enter the trade is because your system should allow you to know exactly where your stop and entry placement needs to be before you ever open the trade. So I say that's just general advice for beginners.
What's your how often do you trade? What's your leverage percentage? And also what's your position sizes, and what's your trading portfolio size like?
The amount of volume that I trade on a monthly basis can vary widely. For example, I've been in the same trade right now for about 3 weeks. That's really kind of the long end of the amount of time that I'm typically in trades. It really depends on the market conditions. I don't ever open or close a trade because a certain amount of time has passed. I have a strategy that is largely based on order book data and price levels, and I'm entering and exiting the trades based on the specific conditions at hand, not a time frame. My average position size is typically around $5 to $7 million a spot.
Another thing I do want to ask you is like, do you think had you not been trading and just holding Bitcoin and just adding Bitcoin position, you would have made much lesser through just a hodl?
No. So if I had just held Bitcoin, I I I I wouldn't have made as much capital at all unless I got into like a highly leveraged position at 4,000 and held it and sold the top, something like that. The only kind of futures trading I do at all is with Bitcoin. So I did a lot of altcoin trading early on, 2019, 2020, 2020, 21. I did a lot of automated trading in the altcoin space, and that's actually where I made the vast majority of my capital. But as far as Bitcoin specifically, no, I wouldn't. That is not the case for most people, though. I think for most people, they would be much better off taking at least trying to capture the major cycles, getting in, holding the majority of their position for the long term, and maybe trying to do some speculation with 10%, 20% of their Bitcoin. But
Just wanted to ask, like, basically, since your capital size is so big, and you said that you're only trading Bitcoin right now, so what about other altcoins? Like, when you want to trade, how do you manage slippage? Like you mentioned, your trading volume is somewhere upwards of 60-70 million dollars, and your spot size is around $5 to $7 million per trade. So what do you do in case of trading futures with altcoins? Since the volatility in altcoins is way higher, and as a for a trader such as yourself, so playing on that volatility would be really helpful. So how do you manage that slippage, and what do you do about that?
for me, when it comes to the larger cap altcoins, I've been staying away from most of them just because the market, when it comes to these higher cap altcoins, really move together. I am always looking out for relatively small cap or projects that are in the pre-sale phase or the VC phase. And for me, I'm either looking to trade Bitcoin, and my day-to-day trading is in Bitcoin, and I'm looking at very early uh, altcoins, really when they're in the seed or angel phase, and I'm looking to hold those for years. I'm a long-term holder, when it comes to altcoins.
Forex, what projects are you working on? What are you developing, and what's happening on that front?
We're putting in a ton of work right now on a platform called Animal Farm, and Animal Farm is a asset lending yield aggregating protocol that allows users to stake their collateral on the platform and lend it in a non-custodial way to dexes and cross-chain bridges. So what our protocol does is allows the trader to stake their single assets such as stablecoins, Bitcoin, wrapped ETH, essentially all of the major altcoins. And our protocol then stakes it in a range of third-party bridges where it then earns yield through fees that are paid when people do cross-chain swaps. So our platform looks at a range of bridges right now: Stargate, AnySwap, which was just rebranded to Multichain, and Seller, and it aggregates your capital between these three bridges to ensure that you're getting the highest possible yield, and you're earning the yield in the bridge's native reward token, which is then swapped for your principal token. It could be a stable coin or BNB or ETH, whatever your principal is, and compounds that back into your principal, which then, of course, increases the collateral that you're lending to the bridge, and allows you to earn compound interest in top stable coins and some of the top altcoins in the space. And it's doing this without relying on inflation. So it's a much more sustainable, and it does not rely on holding on to this highly speculative asset that is constantly inflating in supply and depreciating in value. So in our platform, you're getting your dividend in BNB, BUSD, wrapped Bitcoin, wrapped ETH, whatever your principal asset is. Not only do you earn that as from being a staker, through being a user of the platform, you're also earning our governance token, which allows you to earn a share of all profits generated on the platforms. So you're really acting as an owner of the platform, and you're earning ownership of the platform through utilizing the platform.
Got it. But let's talk a bit about risk here, right? Like, how much percentage is one gonna make on wrap Bitcoin or BNB for that matter? Like the yield market has kind of showed us that it's better to just keep money with yourself. You'll make more than to risk it on third party platforms at all, right? Like,
I'm glad you said that, because the difference between Animal Farm and these other lending platforms is Animal Farm is 100% non-custodial.
but they've been hacked as well, right? Forex. Like, it's not like we've not heard of, even chains like Ronin have been hacked. Like, many of these DEXs platforms that you'd work with. I mean, my thing is, what type of a person from now on would want to use them, and like, how much risk do you think that there is, and how much would one make out of it? Like, if it's self custodial, and if I'm the only one and nobody else is able to use it, then where is the the, the yield
Yeah.
coming from? Yeah.
So there are multiple forms of bridges, right? There are custodial bridges and centralized bridges, such as Binance's bridge, which was recently exploited. And then there are bridges that use essentially atomic swaps and atomic transfers, which work very similar to a DEX, in the sense that you're providing collateral to only one side of the bridge, and someone else is providing collateral to the other side of the bridge, and a transaction is not going through. It's essentially an atomic transaction, so the transaction has to fully complete for the transaction to go through, essentially, and it operates very similar to a DEX. That's the kind of bridges that we're implementing. There are custodial bridges which utilize essentially admin keys and are taking custody of user funds. Since that ability to compound your interest back into your principal token is something that's not native to the bridge, is something that you're only accessing through our platform, you're able to outpace the other participants that are providing collateral and earning yield. So a lot of that compound interest is actually realized, right? It's not being depreciated by the other participants also earning compound interest and selling that reward token. On top of that, as I said, we're also paying yield in our governance asset, which is it's a unique model, and people can check out our docs to really understand how it works. But our AFP token, which is our governance token, is allows you to take your profit not through selling it on the market, but instead earning BNB and BUSD, which is generated through the cash flows associated with the products on our platform. So you're earning about 25% APY compounded on wrapped Bitcoin, and about 25-30% in our native asset AFP as well, which can be staked and allows you to earn cash flows from our other products, such as we have games and a bunch of other products that generate cash flows, that go to the participants, the stakers of the AFP token. So, yeah, I would say you're absolutely right in the case that bridges can introduce a new risk model, and this is why, for one, we chose to only work with fully open source, non-custodial bridges. We're using Stargate. We're also using Multi-Chain, which is AnySwap rebranded, and Stellar, which is the DeFi bridges that Binance recommends. So if you go to Binance and you try to use their bridge, they'll tell you you can use our centralized bridge, you need to KYC, or you can use a DeFi option, and they send you to Stellar or Multiswap. So yes, it is adding an additional layer of risk, but not the risk that you would typically associate with these centralized bridge hacks, like what happened with Ronin and Binance and these other ones.
So we'd probably try to, cover this, like probably feature animal farms. I'll just talk again to the research team and try to see if we can create a dedicated video for animal farms where we can explain our audience how they can leverage these benefits. Although we'll have to, so that's the major problem, right, forex. Whenever there are some unsustainable yields, so initially, like during the early onset of DeFi, people were really lured by higher yield, higher APYs. But now it's working in the reverse way. Like the higher the yield that a platform is providing, people want to stay away from
Yeah,
it more and more. So we have to work out on that
that's
balance.
why we're only paying yield through cash flows that were generated through profit generating products and services, such as providing liquidity to dexes to earn cake, from PancakeSwap, providing collateral to cross chain bridges, where we earn yield off that. We have a suite of games which we're looking to release shortly. They're already developed. We're in the auditing phase, which will generate profit, which will go to the AFP stakers. So the AFP token, which is the governance token, essentially acts as an ability to increase your ownership of the platform, to increase the yield that you're earning.
Also, had another question, Forex. So you mentioned that you are on the top list of the Bybit. So our audience would also like to know that is it the top list by volume or is it by PNL? And if so, then what is generally your average monthly PNL and volume that you're doing on Bybit? So
I used to use Binance in 2021, 2022. I was using Binance, and then they changed their KYC requirements. So I decided that I was going to migrate over to Bybit, and I migrated over to Bybit in early 2022, and I started. I migrated a relatively small amount of capital, relative to what I was trading with on Binance, because I wanted to get my feet wet on the platform and get a feel for it. And I had been trading on there for about 5 months, 5-6 months, and I'm going on my portfolio or my profile on the platform. I took a screenshot at the time because I was just a little excited by it, but I looked and I noticed it said rank number 4, and I was like, I'm ranked number 4. What does that mean? So I clicked on it, and then that brought me to the leaderboard, and I noticed that I was ranked number 4 on the leading board for that month. And from that point on, up until a few months ago, I had been bouncing back and forth between the number 2 and number 7. I did take number 1 for 1 week, but I had been bouncing back and forth for months on this leaderboard. If you look here, this was 3 or 4 months ago now. I ranked number 2 for the month. That was $800,000 worth of profit for the month. I've ranked both on spot and on perpetuals. Now, the reason why I haven't been on the leaderboard in the past 2 months 2.5 months is because the way that Bybit does their ranking is they split it between spot, inverse, perpetuals, and what is going to determine what your what leaderboard you're on is whether you're using the token that you're trading as collateral, or you're using a stable coin like USD as collateral, or you're using spot as collateral. And my trading strategy is varies based on the overall market cycle that we're in. So when we were in this major correction from 60,000, I wanted to keep my collateral in stables. So I was using USD-backed futures and ranking between the top 7 and top 2 leaderboard for inverse USD-backed futures contracts for all of those months. I started to remove some of my collateral from the USD-backed futures to the Bitcoin-backed futures. And the reason why I did this is because I'm holding millions of dollars worth of collateral to back my leveraged position, and I want to get exposure to wherever I'm going to see the most upside. I prefer to be in USDT backed futures because they're more liquid. It's easier for me to get in and out of the trade. But when we're in a very strong bull market, it makes sense for me, and it's more profitable for me to be holding my collateral in Bitcoin and using that as my collateral to take a leverage off of.
So how can people follow you and your trades? Like, how can people make it easy to find out what you're doing, and like how to connect with you?
Yeah, so I have a Twitter account. It's Forex Shark, spelt with an O and a 3, so FOREX_shark. You could also look at Animal Farm DeFi, and you'll find me. I am a professional trader, and I do not sell signals. I do not sell any systems or courses or strategies. What I will say is I do have a DAO group called the Reap DAO, and people can join my Twitter account and join our Telegram groups, which you can find the links on Twitter, and we do have an information sharing group called the Reap DAO. On top of this, we do third-party raises, and we're always sharing opportunities in there. So as a professional trader, I never want to be projecting where I'm going to be making my next move. It's fine for me to say what move I just made after the fact, but this is just a general rule that people that are getting into trading and are trying to learn, keep an eye out for people and how they share their information. People that seem like they're giving you a strategy are most likely trying to make money off of you, not the markets.
Got it. It was really insightful speaking with you, Forex. Thanks for being on the show.